What we want to talk about this afternoon is scaling up, because there are lots of examples out there, and we can all cite wonderful examples of wonderful enterprises that are doing a very good job. But the question becomes, how do you scale up? How do you go from supporting one enterprise in one village or one city to really scaling up so that you have a much larger development impact, so that you're working in 100 regions or 100 villages? You're changing entire innovation ecosystems rather than focusing on one small piece of the puzzle. So I'd like to call up the next three panelists who will be working with me: Mark Grobmaier, Randall Kempner, and Renee Kaplan. And we will start talking about this whole question of creative capital structures for scaling up innovation. And what we would like to do is try to have a little bit more time than we had this morning for questions and answers among the panelists, but also with all of you. So what I'm going to ask is each of our three participants here to first make just a very brief personal introduction, a minute or two, who you are, why you're here. And then we'll go down again and ask everybody to talk, and I'll sort of introduce each one, talk about it for a few minutes about a specific issue, and then we will have a discussion and then open up for questions. But I hope you will find that this is a very intriguing set of additional issues related to scaling up innovation ecosystems and how it all relates to the rainforest. So first, Mark Grobmaier.
Thanks, Al. I'm Mark Grobmaier, and I'm chairman of the Global Technology Deployment Initiative, which involves a wide range of organizations focused on accelerating the deployment of technologies to where they're needed the most. And we'll talk more about that later.
I'm still Randall Kempner, and I'm still, I think, Executive Director of the Aspen Network of Development Entrepreneurs. And I'm here because a true expert in the field, John Kohler, was unable to join this afternoon, but I hope that I can do him and his work justice.
And I'm Renee Kaplan. I'm Chief Strategy Officer at the Skoll Foundation. And I'm here because we are all about innovation and working with social entrepreneurs and really committing even more so in the coming years to collaboration in a more practical way across sectors. So look forward to having more conversation.
Well, thank you all very much. When I first met Mark in Washington, D.C. several months ago, he was telling a fascinating story, which I'm going to ask him to repeat for all of your benefit, which is how he's been working, in effect, with social enterprises, finding technology that can be used to solve clean drinking water, clean energy sorts of problems, and then scaling them up. So without further ado, Mark, if you could tell us a little bit about what you've been doing.
Well, thanks, Al, again. The Global Technology Deployment Initiative was designed with the help of a number of people and organizations, the multilateral development banks and agencies and others, including the private sector, venture capital, and the companies that they have supported. It's been about a 3-year process to organize the initiative and to actually put it into play. What it's all about is, as I mentioned before, is trying to devise a system that can take technologies that otherwise, through organic growth, might eventually get to a number of countries, but not in a very effective or speedy manner. And so we set out to determine what are the barriers to technology deployment. And let me start first by saying I think if we don't do this, the world is in big trouble, because if you look at the resources and you look at the number of people and the rising income levels of people, particularly in developing countries, there's not going to be enough clean water, there's not going to be enough energy, there's not going to be enough clean air, there's not going to be enough food. Fortunately, the solution to those problems does exist in the form, we think, in the form of a number of proven technologies that can dramatically reduce the need for electrical consumption, can make a lot of bad water into good water, but they do no good if they're not deployed. So that's what we're all about. Now, the issue is, what are the barriers? Why is this not happening today? So after a lot of study, we found about 4 key barriers to these companies. First is that even if they have a great proven technology, they don't know how to go about finding partners in other countries that can be distributors, or we call them franchisees or project developers. Even if they do know such people, they frequently lack the financing to support their international division of their company, where they can hire a dedicated team to focus on those markets. Even if they have all of that, the local group in the country, which you want to be the distributor, project developer, or franchisee, frequently does not have the funding they need to do their job. Now, again, there's not a lack of programs, there's not a lack of financing for this sort of thing. It's a lack of connecting the resources to where they're needed and how to scale up this issue. So as a business model, we looked around and tried to find what is the most effective in the past, in the history of business in the last 20 years, what's been the most effective route to deploy any sort of a business on scale to multiple countries. And I think the answer is sort of obvious. It's the franchising model. If you look at what McDonald's did, what our friends at 7-Eleven have done, I mean, there's virtually no part of the world you can go where you won't find those businesses, and almost all of them are successful. And the reason they're successful is because they combine training, marketing, business plan support, equipment packages that work, and entire system to support the replication of those businesses in multiple countries. So that's what we do, is we work and find the technologies, we find the local partners or franchisees, we use Ex-Im Bank financing, we use other financing that's available, many programs, U.S. Trade and Development Agency has feasibility funding. There's about 30 programs we work with. The problem is most companies don't know they exist, or if they do, they don't know how to access them, and if they go to do it on a one-off basis, it's very expensive and time-consuming. But if they're going to use the same program in 30-plus countries, it becomes much more economical to develop that scale. So what we're doing is we're working with companies. I'll give you an example quickly. There's a company that makes an electric generator that can run on very low-quality methane gas. So where do you get low-quality methane gas? Well, you can get it from a rotting pile of garbage. You can get it from animal waste. You can get it from agricultural wastewater coming out of the back of a palm oil plantation. There are lots of places you can get what eventually becomes methane, which is natural gas. So if you're able to capture that and you get the right equipment and you put it in the right package, you can get the gas. The problem has been it's low-quality gas, so it's not worth much. But with the new technology, you can burn that gas and power cell phone towers. You can scale it up and put multiple units in to power a village or community or a hotel or resort. You can combine that with other systems to create hybrid power systems. People can pay for the service using cell phone banking, where someone texts a message to a relative from the diaspora that can then show the cell phone to a meter, and it gives the household so much electricity per month. It's just amazing what's out there, but again, the problem has been lack of deployment. That's what we, with all of our partner network, including the CEEF organization, which is, if you don't know it, it's a very interesting organization based in Washington that runs a series of private equity funds in about 30 developing countries. And over the last 20 years, they've had an average return over 20%, which is pretty amazing in the jurisdictions they work, which include Afghanistan and places like that. But anyway, they have been investing in local companies that do great things, but again, they have not done it at scale because they haven't connected the dots to take one company that's done a successful deployment and take it to 10 or 20 other countries. So that's what we're about with them. So thank you, Al.
Thank you very much. One of the other problems that we face is in financing, that there may be financing, grant financing, for example, to fund an early stage startup of a social enterprise, but then as the social enterprise begins to grow, it runs out of grant funding. It can't operate on increasing amounts of grants forever, and there aren't other sorts of financing available, and so the enterprise hits a natural point of growth, and then it begins to stagnate because the financing mechanisms aren't in place. So there's been some work done recently, and I'd like Randall to talk a little bit about this, about scaling up impact investing. So how you can take impact investing, which is available on a small scale, and begin to scale up the sorts of enterprises and the growth. If these enterprises become rapidly growing, how you can scale that up to allow them to grow.
Thanks. Let me start with a question. How many of y'all are Silicon Valley-based venture capitalists? One. Just how about U.S.-based venture capitalists that invest in U.S.? Only like 2 or 3. They're good. Victor better. No, I only see those guys. All right. So, is your job easy, Victor, Greg? What percentage of time do you get it right? 2 out of 10 is pretty good for venture capital, right? Yeah. So it's not that easy to be a good venture capitalist, right? But imagine if you were trying to do this in a world in which you weren't screening investments just locally, just on Sand Hill Road, but globally. And in those countries in which you are actually seeking investments, they lack effective or stable governing regimes and legal systems. If when you found companies, it was rare to find them with audited financials, or indeed rare to find auditors that could actually do such things for you if you were looking for them. If there were no credit bureaus or well-established mechanisms to do background checks on individuals or companies, if there was a weak or non-existent angel and venture capital community of local players, and almost certainly no stock exchange for which to support an exit, if the business owners that you were trying to work with were generally afraid to give up enough equity that would give you any sort of ownership stake, and generally didn't trust foreigners, and if the other investors, who are often foundations or development financial institutions, have different goals than you do for the purpose of the investment. Welcome to the world of investing in small and growing businesses in emerging markets. So in that context, there's obviously some implications, which is obvious for the deal structuring side. It's a different world than a traditional private equity investment round. You need to recognize that the obvious thing is this traditional path of up-round private equity investing doesn't exist in most parts of the emerging world. You need to think and to consider new structures, new modalities, new mechanisms, new partners that would allow you to make such investments successfully. So the purpose of this report, and I'll show it, but I hope our friends at Santa Clara, which have a booth out there, it's called Coordinating Impact Capital. It's a report that John Kohler put together on behalf of Santa Clara and also on Andy's behalf. Looks at what are some of these modalities, what are ways which he calls to do horizontal capital aggregation that work in a world in which the vertical up rounds of private equity don't. And so one of the key findings, not surprisingly, is that it can't just be equity that you're using. That in these sorts of investments, people talk about different colors of money. There's a wonderful woman named Mitchell Strauss at OPIC that talks about the layer cake of different financial products. So we talk about recipes. There are more ingredients, and there are more ways of putting these ingredients together than what you would find if you were a Silicon Valley venture capitalist. And so we're talking about grants. We're talking about soft loans, so loans that have a less than market rate interest rate attached, quasi-equity in its various forms, and then traditional equity, and ultimately senior debt. So it's all of these things, but they come in at different times in different ways and are being sought out and applied by people and organizations, in some cases that have less of a financial return goal than a social or an impact return goal. So in the context of that, what I would say is that there is one type of those which seems to host or have a lot of promise, which is the quasi-equity piece, and in particular royalty-based loans, so I'll call out that one piece, which it's a financial instrument where you as an investor are taking a minority, typically taking a minority equity stake, but also then making a loan where you are able to take either the highest number, either their projected revenues or their actual revenues, to make sure that they're not making up the numbers which you can't audit, right? So you're getting a revenue flow, they're keeping control of their company, and you have some mechanism, some equity rights in terms of how the company operates. So I won't go into more details there, but I would sum up in this way. What this report says and what we have found is that you guys in Silicon Valley, the three of you that are here, you have it easy. And that if you're going to venture into the world of impact investing, you need new financial tools and you need to expect to work with new and different partners. One promising tool is royalty-based lending, but critically, this is a place where financial innovation is not a dirty word or a dirty phrase. For those of you who want to be financial innovators, you are more than welcome to play in this space, and I will look forward to talking to each and every one of you after this session. So thanks.
Okay, well, following that note, so for those of you who don't know the Skoll Foundation, I'll just say a couple of things because I think it's relevant. One, we are vehicle agnostic. So my portion of what this conversation is going to be about is what we're doing on the philanthropy or foundation side and how we look at accelerating the flow of capital. So the Skoll Foundation, just real quickly, we're a $1 billion foundation founded by Jeff Skoll, who was the first president of eBay. A firm believer in that entrepreneurs ultimately are the disruptors. They're the ones who have the innovations that crack open the systems and behavior and policy change. So we right now have a portfolio of 91 social entrepreneurs, 74 organizations working across the globe, and we have distributed so far about $300 million. And what happened a couple years ago, I'll just want to share an anecdotal story, but again, it'll tie back. About a couple years ago, we did our 10-year review with Jeff Skoll and our board, and we were touting the amazing achievements of our social entrepreneurs, and there were many. Most of them had scaled. Again, we were very fortunate in our selection process. We're a mezzanine level funder, so we do have some luxuries that way. But we had a tremendous success rate in terms of the social entrepreneur scale, their ultimate funding, their ability to partner and get other capital. What we ended up, there ended up being a big pause at the meeting, and Jeff said, "So what?" And he said, "Okay, we've got a lot of organizations that we've helped scale. That's great. How are we solving the world's most pressing problems? What does that look like? Who can tell me how we're doing that and how my $300 million has returned in that way?" And no one could say much. We could talk activities, we could talk entrepreneur by entrepreneur, again, organization by organization, but we couldn't aggregate the data. We couldn't aggregate the flows in terms of looking at the connections of the money. If we help one entrepreneur over here, how does that help an entrepreneur doing this work? The issues we know are complex, as Mark just outlined. I think or Randall just outlined. I think that set us on a course to really look at doing things differently. As a foundation, again, we should be the ones taking more risks around creatively looking at capital, the ways that we can access it, the ways we can help others access, and the ways we can match and do things a little differently from our side, besides just a traditional grant. So right now, that's changed the way we structure our investments. We still look for social entrepreneurs that we bring into the portfolio every year, and we fund them individually by organization. But now we're also switching to our second kind of main or doubling down method, which is looking at what we're calling our innovation investments, which is taking the impact that we want to see, putting that at the center. So whether it's eliminating pediatric AIDS transfer from mother to child in 22 countries in Africa, by 2015, that's the outcome we want to see. How do we as Skoll help fund or create incentives for other funders to come to the table to achieve that goal, both from a corporate perspective, traditional funding and for-profit, and from government, and then from the philanthropy side. So we're looking for those kinds of deals and how we can be a bridge, a connector, how we can free up and leverage our money to match and, again, create other incentives for others. We, in addition to those innovation investments, which we're looking to really ramp up this year, we've just made the first few last month, and we'll see how those go, but about $20 million worth. The other part, we're looking for a really strategic collaboration with other funders. And again, we're vehicle agnostic. That can be PRIs, that can be matches, that can be grants. We did a $44 million partnership with USAID that we're really excited about. Those first placements will probably happen in the fall, where organizations that we both have in our portfolios, or at least have done extreme amounts of due diligence on and know are successful and are innovative and could be, with additional funding, be scaled, we're going to be placing those dollars. So that was, a very interesting opportunity for us in looking at partnership as a foundation. Most folks that we talked to, we said, hey, we're talking to USAID, and they're excited, we're excited. They're like, that'll never happen. Good luck with that. And it did. And I think we're seeing much more openness from a government perspective, from corporate players. Johnson & Johnson, for instance, is at the table around the AIDS prevention that I just mentioned, that deal. So we're seeing that and our role as a foundation really being a catalyst and being able to bridge some of the funding and look at how creative can we be and how out of the box can we look at some of these investment opportunities and where they can really show outcomes around an issue versus organization scaling.
Well, thank you all very much. It seems to me, just abstracting from what was just said, that what we have here is, first of all, innovation, just going down the line of presentations, innovation in business processes. That there's a franchising model out there that may be an interesting way of scaling businesses from one location to multiple locations. To support that, there are going to be innovations in not just business processes, but also in financing mechanisms, both through the use of EXIM and other vehicles to fund these franchises, and then also in the social impact arena, scaling up the impact investing. So we need to have innovation on the part of how financing is made available to these enterprises. And then we have innovations in the foundation operations themselves. What is the objective? Is it supporting an individual entrepreneur, or is it trying to change the entire innovation ecosystem? Or, to use the words in effect of what Edward Young was talking about just before us, create a platform and then say, we will fund anybody who can innovate around this platform to solve whatever this particular social problem is. And it seems to me that, and I'd like to sort of throw this open to you a little bit, it seems to me that there's also an interesting link between all of this and what we were talking about this morning. Because this morning, in effect, we were talking about how do you create an innovation ecosystem that encourages entrepreneurship, that encourages an entrepreneur to come forward where he or she is living, and to find business opportunities and to take risks and to explore those business opportunities. And again, we were saying it's questions of trust, linkage, connections, and so on and so forth. But I'm wondering, how do you see the support of entrepreneurship and innovation at the ecosystem level, as we were talking about it, or as at the rainforest level, if you will, with what it is that you're talking about? I see the connections, but I'm hoping perhaps you can elucidate a little bit on that. Whoever wants to go first.
See if I'm responsive here. I mean, from the Andy perspective, we're kind of lucky. I mean, we are, I guess, trying to be keystones in the terminology. Both Skoll and CEF are members of Andy, and what we try to do are bring together players, and Santa Clara University as well, bring together players who are innovators so that they can work with each other to develop these new ideas, not just on financing, but also on how to provide capacity development, technical assistance, on how to educate entrepreneurs, on how to change policies. And we try to create a platform in which they, through our working groups, Capital Aggregation Working Group, for example, can come up with these new ideas. And then, through the network, we have 5 regional chapters in places around the world where they actually can work together on the ground. So I don't know that Andy is innovative. I mean, industry associations and networks exist in lots of different industries. But it is a sign that this industry of supporting small business entrepreneurship is emerging and professionalizing. So I hope that's somewhat responsive.
I can give you maybe a concrete example. 3 of the technologies that we work with, if you put them in a building, odds are you can save 60% of the electric bill on the heating and cooling for the building. And in many countries, particularly in the southern hemisphere. They're use a lot of air conditioning, and they're not very efficient. There's two NGO organizations that we partner with. One is called the C40, which it's started by the Clinton Climate Initiative, and Mayor Bloomberg is running it now. But it's was the 40 largest cities in the world, and now it's the 58 largest cities in the world. So it's everything from Hanoi to Mumbai to New York. But these cities all have a sustainability officer, and their job is to look for technologies and things that can be put in government buildings and schools and also to the private sector. In other words, they're creating the market pull for these technologies all around the world. And so in each of the cities, we need to find somebody to be the distributor, the installer, the franchisee, so to speak, to take that technology to those cities, even though the market is there and we know the pull will be there and we know the money will be there because it saves enough money to pay for itself in a very short period of time. There's another organization called ICLEI, I-C-L-E-I, which is 1,200 cities around the world. So it's usually smaller cities that I'm talking about. But those organizations are funded in large part by other NGOs, and I don't know if SCOLE is involved in that or not. But anyway, these are things, these are concrete examples. It's a way to get to 58 major cities involving 30 countries with specific technologies and available financing very quickly.
I would just add one other point. I think around innovation, it's really overused, and it can be defined multiple ways. I think what we see as a trend that certainly we haven't mastered, but I think it's at the center of this, is how do you collaborate if you're not getting paid to collaborate? A lot of the social entrepreneurs that we talk to that are in our portfolio in early stage say, great, love that you want me to be really open to these other partnerships. If I spend time doing that, I can't spend time raising money from my programs, and I have pet programs that key funders really like to fund. At the end of the day, that's where I get my money. And so I think being innovative from our side is looking at the foundations of how can we as funders create more incentives and actually help the entrepreneurs get access to some of these other funds and these channels that doesn't require them to reinvent the wheel and to be out doing something separate from their business that takes them away from their business. And that's a really hard challenge. I don't think we've mastered that yet. With technology, we're certainly getting better at being able to connect people faster and accelerate learnings. But as an example, one of our, I think most successful entrepreneur organizations in terms of corporate partnerships was Marine Stewardship Council, which did a deal with McDonald's Europe, getting sustainable fish, which led to 100 million sustainable filet-o-fishes being sold throughout Europe. We're very proud of that, and that's a great story. It took them over 6 years to get that deal done. And I look at that in terms of collaboration and innovation and where we could get better at accelerating. Clearly, there was a supply and demand issue. There was great benefit to both organizations. How can we as funders really help incentivize so that those kinds of opportunities don't take that long and can be much more valuable in the end and can be accessible to others that are starting out?
I mean, I think one of the things that comes out from this is that, first of all, innovation is not necessarily something that comes out of a university lab, and you don't think of innovation only as, well, the scientist does some research and then you commercialize it and you have a product and you have a business and you call that innovation and it's job creation. That's one way that innovation occurs, and that's something that's kind of common or more common here in Silicon Valley with Stanford, and the model that was built up here is built up on this sort of technology flowing out of the university and into the marketplace. But what Mark was talking about is really an innovation where you take a technology that already exists. It may have been a rather common technology that's existed for some period of time, and then you find a way to innovate in the deployment of that technology, and in doing that, you generate jobs, you generate wealth, you create jobs, and you solve problems. The problem could be sustainability of the city, the problem could be food processing. One could use the franchise model for all of these different sectors, because Renee was saying that SCOLE is instrument agnostic, and I think the franchise model and the social enterprise, the social investment, scaling up impact investment, is also sector agnostic. So these are very generic tools that one can use to support a variety of different innovations. They could be new technologies coming out of a Grand Challenges program. It could be existing technologies that need to be deployed in different markets and people don't have the way to manage that deployment.
Let me give one more specific example, and it involves the Gates Foundation. There's an organization, NGO, called Heifer International. Many of you may know of Heifer. They're in about 60 countries, headquartered in my hometown in Little Rock, Arkansas. But for years, Heifer was about the business of giving or donating dairy cows to very poor people in small villages and teaching them how to raise the cattle and then how to give them away to others in the community. And they started doing that many years ago, and then they recently came across a technology that when you breed dairy cows, you're guaranteed another female offspring, which dramatically increases the dairy herds. And so in Kenya and Uganda, these poor dairy farmers had an overabundance of dairy cows, so they had more milk than they knew what to do with. So with the help of the Gates Foundation, equipment was acquired to build a series of 16 dairy cooperatives. Well, that brought in additional technology because you had to have alternative energy to run the chillers, you had to have clean water systems and all the rest, and ice-making equipment and all. Well, it became so successful that then they can start doing ice cream and yogurt and other higher value dairy items. And so now they're shipping these products not only to Nairobi and other big cities, but also to the Middle East. And now these guys and women that were raising dairy cows one on 2, 3 basis 10 years ago are driving in Range Rovers and talking on their cell phones and employing other people. And there's 16 dairy co-ops, and now it's being franchised, so we can do that in multiple other countries. We don't need Gates' help anymore to do that sort of thing. It becomes a good investment for SEAF, for example. So that's just a concrete example of how this can actually work.
Well, thank you very much. And these are the kind of examples which I think are very important to just give people a sense of what the possibilities are of doing this. And then you need to begin to ask yourself the question, well, how do I use the impact investing and the various instruments that are available out there to start supporting these things so you get the demand for the impact investors to provide different sorts of instruments to solve these problems. And just to tie one thing together to another, what you were just talking about with the dairy co-ops is really on a smaller scale an example of what Edward Young was talking about just a few moments before this, of a mega project. Because if you define the mega project as increasing dairy production and increasing dairy production from just subsistence dairy production to a more cash-oriented, commercial-oriented, then you have all sorts of technologies that are required, and suddenly you begin to say to yourself, well, if I'm running a university research program, maybe I ought to focus my university research program around solving this dairy problem or calling for proposals to solve this dairy problem. So I think these are ways that innovation programs in emerging markets and everything that we've been talking about begins to sort of weave together and hopefully weave together into a larger picture of things. At this point, unless my colleagues have questions of each other, I'd like to sort of open it up to questions from anyone and everyone who... Yes, please. And someone I think will bring a microphone, but if not, if you just yell very loudly.
Is the legal framework in which to make the investment. It's so convoluted in a lot of these countries that no investor feels comfortable investing in that, to the point that we have to open the companies in the US and then make subsidiaries in the Latin countries and have 2 teams, which is not very good. How do you address that? I mean, sometimes there's not even the lawyers that can give you the correct advice of what to do.
Yes, that's addressed to me. I mean, I'll maybe toss it around and say the right answer is you work with, say, the World Bank or the Latin American Development Bank, who has those those ties to those governments to express this to them. I'm I'm more optimistic than I have been, just because there's so much activity now around impact investing and around broadly investing in small businesses and emerging markets, that you're not alone anymore. And that through organizations like the Global Impact Investing Network and through Andy, there are a growing number of organizations that care about the same issues. And it will be the legal ones, it will be issues around exits, issues around creating credit bureaus. I mean, there are lots of things that need to be built to get to the level of efficiency that you see in capital markets in emerged markets. So it's not going to be easy, but I will simply say, despite the challenges that I listed and the ones that you've just said, there's still great deals out there, and people are making them happen. So now is not the time to be sad. Now is the time to take advantage while you're willing to do the hard work that others won't.
I would add to that as a lawyer. There's a reason C, for example, is in 30 countries and not 85 countries. And part of that is because 30 countries have a good legal framework, and they want the funds to be there. I think what's starting to happen is countries who are not attracting the investment today are seeing the benefits that other countries are enjoying, that are receiving the benefits and have the support of organizations like they're represented here. And so, at least in ones where there's some form of democracy, there's starting to be some pressure put on folks to get the right regulations and to get the tariff situation and clean up the corruption. It's not going to happen overnight, but we just don't go to those countries that are not, respectful of what we're trying to do. And that's unfortunate for the people in those countries, but there's plenty of other countries where they do welcome this sort of initiative.
Yes, over here. Will, and then this gentleman over here.
I can certainly start that conversation. I think for us, what's exciting about the alliance that we've established is the idea that aid money can be more efficient and less, going through so much channels and getting filtered, and less apt to have corruption happen at the the ground level. I think we want to see that. USAID wants to see that. So if we can get those channels or help with the efficiencies, I think USAID should be looking for that wherever possible, and then really holding folks accountable. I'd also say, I don't know about what not to do, but I think certainly being more transparent versus not helps. We're seeing transparency as a theme across the board with not only with any kind of big funding mechanisms, whether it's RED for deforestation or with USAID. So I think we have to be accountable too as co-funders now, and we're on the hook, and our board and our community is very clear that SCOL, our brand is now very tied to USAID, and that's a risk for us, and that's also a great benefit. So we're going to be pushing USAID in a good way, I think, for how are we being more transparent about where this money goes, and for what reason and what were the outcomes, and how do we learn and continue to build on the things that are working versus fund things that aren't, and be transparent about what's not working.
Well, I'll just tell you my dream. I would like to be in front of every single mission director within USAID to talk about the power of entrepreneurship as a tool to obtain the ultimate goals which USAID is trying to have. USAID has a bunch of tools that you can use, and mission directors get to make those decisions. I fear they don't know about the power of entrepreneurship. And so if it's not me, get someone more eloquent, but get the message in front of the eyes and ears of those mission directors.
Yeah, I would add one thing. I think that the NASA launch initiative that AID is a big part of is very important, and I think if there's some way to have these mission officers not only know about the programs that can support entrepreneurs, but also what technologies are available that maybe weren't there 2 years ago. That's a very important thing to address.
We have well, we have a lot of people with microphones and questions, and the gentleman over here. Let me just go to this gentleman over here, and then we'll come back around to this side of the room, and I apologize for...
Well, that's something I've been involved in for some time. About 3 or 4 years ago, Prince Charles decided that if there's going to be a lot of money needed to address these issues, where do you go for the money? And the money's in the large pension funds and sovereign wealth funds. So he convened meetings at the time called the P8, or Pensions 8, which has grown now to the P80. Former President Clinton's gotten involved in that. And there's actually been created this thing that Jim Hurd just mentioned, the CP3, which is a fund of funds, which hopes to have anywhere from $5 to $10 billion, and then much more after that, where large pension and sovereign wealth funds can put big blocks of money in and then have it broken into projects and other funds. So I think if we all do our job and we create a lot of franchises and we train a lot of entrepreneurs and we get a lot of seed programs going, this money will be well deployed when it's available to deploy, but we've got to start now.
Yes, sir, and then we'll come back around.
David Wilcox, Reach Scale. A lot of the money, and it's really great to see Skoll here because I think social enterprise has been underrepresented in our meeting so far, but a lot of the money focuses on the declared for-profits, and the people working on really big problems don't get there for a few years. They have to capacity build. And those are some of the most innovative opportunities, and they're totally under-recognized among the large corporate and government and even NGO players. So the question is, how do we shift the frame so that corporations, for example, who only give $15 billion of the $300 billion in philanthropy, with all the money on the sidelines, can begin to see the opportunity to solve really big problems, part of which will turn into business opportunities, part of which will turn into reputation gains, and part of which will take them into the next century and help them figure out how to do business in the global south?
It's a great question, and one that we hear a lot. I think the short answer is we have to help, and I think be better at, and I think many corporations are already moving this way in a very strong position, but show them the benefit, the business benefit. The supply chain issues are real, and we're seeing the entrepreneurs that can get into understanding the supply chain and kind of not sell at the CSR level so much, though there are terrific CSR organizations, and that's not a discriminating comment, 'cause I think they're doing great work, but really look at the business side of the CEO office and how do we sell in, partnerships, organization, for instance, the MSC and McDonald's. That's hard to do, so it's not an easy path, but I think we can make that case. I think the funders like Skoll Foundation, Gates, and others have to help and make the connections and use our networks in a way that are much more strategic for the social entrepreneurs, because you could knock on doors all day long for a long time and not get the answers that you need. So that should be a role where other networks can play, and foundations like us have to step up. But I do think corporations are seeing much more value, and there's just just market trends, they're going to have to care that, whether it's water and Pepsi or whether it's McDonald's and fish, these are essential things for their business. So at the general level, it's there. It's just how do we get the right structures and make it easier and show that we also have respect for the supply chain and can make real business cases.
So I have a question.
Just a quick comment regarding Randall's earlier thoughts about investment and VCs, and a quick disclaimer, I'm probably one of the 3 VCs in the room. So in the previous panel, someone asked about the applicability of Y Combinator's model to Mexico. Y Combinator is a for-profit, and there's a reason why it's so successful in the Valley and maybe in a couple of other locations. whether it's the quality and the quantity and the role models that exist in the Valley, and again, maybe in some of the other places as well. But it's very hard to replicate both the YC model and the VC model into more emerging geographies. And I think that's where the government needs to play a role and put the incentives and the premiums for the investors to be there for the long run and not for the short profits. And I'll just give two quick examples. Co-investment together with other VCs. Chile was mentioned here previously. The other thing that Chile is doing is co-investing with VCs. So for every $1 that you raise, the government is putting, I think, 1 point something or $2. The same thing Israel did about 20 years ago, and that's how the venture capital community started in Israel. A quick second example regarding the incubators is we're starting to see a lot of government incubators. Taiwan is another good example with the III. And again, they're in it for the long run and not for the short-term profits, because it's going to take a while to see some successful startups in countries like Taiwan and others. So that's just a quick comment.
Thank you.
So, we're here.
Yes, we'll take a question
so
over here and then one over here.
We're all here to support entrepreneurship around the world. Ecosystems, startups, entrepreneurs, money are not the problem. The biggest problem we face today as far as global innovation are visas, H-1 visas, which have run out this year. So I work with 27 companies in the Middle East. 90% of them can't even come here to learn what Silicon Valley is. Who's going to solve that? When is it going to be solved? And how do we start a movement to make that faster and sooner?
I applaud the question. I think there's a great article in The Economist, if folks haven't seen I think it was 2 weeks ago, around this very same thing. That was a disadvantage for the U.S. and how we're losing business, internationally for this very reason. And it's a simple fix, and these are, and not simple, but there are fixes. And I think one of the initiatives we're involved with, and I don't know, we'll see how successful it is Arianna Huffington has gotten some corporations, foundations together to really look at jobs in the U.S. And given the election year, given the upcoming national conventions, really trying to put a stake in the ground around creating U.S. jobs and how organizations, if we can accelerate funding for some of these entrepreneurs who are out there doing great work and that should be in the U.S., and the visa is a part of that. So the visa issue is a part of that. We're hoping to raise at least awareness around it and put some pressure on the right political folks that can make some of those changes. We'll see how successful we are, but either way, we're definitely making jobs in the U.S. is certainly a high priority because we know it's an issue, and focusing on social entrepreneurs.
We should all sign a petition today.
Yes, sir.
I'll take a shot. I mean, I think the right answer, Martin, is that we actually don't know what returns most impact investors are getting because most of them aren't sharing that information and most of their funds aren't done. But I agree with your sentiment, which is that I, at least, and Andy, and I think everyone is, we're not in this, I'm not in this because I care about creating a new asset class. I'm in this because I want to create a new middle class in developing countries all around the world. And there is no doubt in my mind that whatever happens with impact investing, there will be a continued need for philanthropic support and for government support of innovative ideas that come from whatever sector they emerge from. And I was just in Asia, there seems to be the foundations there all want to sort of dump their philanthropic stuff and jump into the impact investing. And I think there is some threat of that. And so we need to be smart about being honest about what the real returns have been. And again, Andy and Jen and others are going to do that. And we should convince foundations to do more mission-related investing so they can save all of their funding for grants and PRIs. But let's not lose the initial point here, which is we want to leverage market-based solutions to addressing major social challenges. That wasn't happening before. Now it is, and I am so much less worried about it being utilized too much and some impact investors not getting the returns that they want than I am about us not leveraging market forces. So let's celebrate that, let's cement that, and let's figure out the right way to do it.
I would just say that it also depends on how you structure the deals, and what we're working on. We're projecting over 20% returns with a lot of risk mitigation, and maybe there's deals we're not doing because we won't get those kind of returns, but there's plenty of deals that we are doing and will do that will achieve those returns or higher.